the bear market. Now, a lot of people that I meet in crypto, especially if they're new to it, their mentality is, yep, I'm going to go hard on this cycle. I want to make heaps of money. But then they're never really paying attention to crypto when it's in the dust and everything's bleeding out and it's not fun anymore. And the bear market is where you make your money. If you are diligent during the bear market and you dollar cost average into positions with the understanding that, yes, I might be buying into Bitcoin. Let's say, for example, this is the end of the bull market and Bitcoin starts crashing from 120K back down to 110, 100, 90, 80. You're starting to feel a bit sick. If you're sitting there without a plan of dollar cost averaging into it and just waiting for the bottom, you're never going to pick the bottom. You need to be willing to understand the market cycles, where we're at in the market cycles, and have conviction to dollar cost average down and be willing to be at a loss for that year or two, because no one can pick the bottom. The only thing you can do is have a plan in place. And going back to this one here, our average buy in Bitcoin after the recent crash was, on the left-hand side, 22,500. But we didn't just buy at 22,500. We were buying as it was dropping from 68 to when it got to probably about 30 was our first buy. Around 32 was another buy when it got to 28, and we bought our lowest at 17,500. So there was a period there where people were saying, oh, are you getting this right? It's like, yes, like we understand we're in the distribution phase right now and we are expecting to lose on positions, but we know that our average position in this period will be a lot better than others. And I'm not sure, there's probably people in this room that may have got a better buy than 22,500 in that cycle, but a lot of people wouldn't have. And a lot of people probably entered closer to the 60, 80 when things started taking off again. So really, really important to pay attention during the bear market.